All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about the unintended business owner. I call it that because I was on the phone with a new client recently. I'm doing an intake, just to get an assessment of everything that they have going on. And they mentioned that they have a job. They go and mention that, oh, I also receive the 1099 for some other work that I'm doing. And they mentioned that 1099 for a side gig that they do. And what that person didn't realize is that with that 1099 compensation as a non-employee, and with that, you are considered a contractor. With that, you need to file what contractors or independent contractors need to file, and that's called the Schedule C, which is also the same form a business owner would file to handle their business activity. The reason why I laid it out is because I realize, and you've heard this before, that not everyone realizes the consequences of working as a 1099 or receiving that or 1099. Most folks view it as, well, I'm getting paid and taxes aren't being withheld. So that's a great thing. They say, oh, well, I'm getting all of my money. But what most folks don't realize with that is they get that 1099 and it essentially lets the IRS know that you are a small business owner. With that, and being considered a small business owner, if you go ahead and just report that income regularly, because it's self-employment income, subject to that additional self-employment tax, which is another 15% roughly on top of what your normal tax rate is. What also tends to happen is folks jump for joy when they say, oh, well, taxes aren't being withheld and I'm getting my straight check. Everything is all good. Then they get jammed up come tax time because they get stuck with this tax bill because they're not anticipating or don't know that with that self-employment income, you have to pay that additional 15% on top of what you normally pay, and of which you're having no taxes withheld. So you wind up paying the tax later. But the moral of the story here is that may not necessarily always be a good thing when someone says, hey, we'll pay you and not withhold taxes if you're not prepared to go through what you need to minimize those taxes. Now, with folks that aren't prepared for that, what I see them do is you just report the 1099 income and then you wind up paying taxes on the full thing and usually wind up owe quite a bit depending upon how much it was. But you become that unintended business owner because in order to minimize your tax liability as a result of this self-employment income, you have to be prepared to file a small business tax return. Most of the time it's a Schedule C, but then also record and utilize the business expenses that you might have had to offset that. If you're working from home and taxes aren't being withheld, you should be utilizing the home office. If you're utilizing your own equipment to work, to do the work, you're using your own computer, phone, internet connection. These are all things that you can use or expense against that 1099 income. And the problem that I see a lot of times when I hear people say, oh, well, they're not withholding any taxes from it, is that they're not necessarily prepared or aware. They're either A, not aware of what's coming down the pipe, and then B, probably more importantly, they're not prepared to file to minimize that liability. As a result, they wind up really getting jammed up more in the long run and winds up being more headache than what it might be worth if you're not prepared to properly file, properly document, and deduct those expenses that need to be withheld. That also raises another question, which I've spoken about before, is that work that you're doing, does it warrant you getting paid as a contractor where taxes aren't withheld? Or are you really an employee? Are you really an employee? And the person that's paying you, the employer or the client, is that they're paying you and avoiding their share of the payroll taxes that they should be paying if you're really an employee. So there are a couple of tests that you have to go through to determine if someone is really a contractor employee. You do the same work for other people. Does the person that's paying control when and where you work? So there are a couple of tests. I don't necessarily want to go into it here. I think I spoke about it before, but the point is you're really going to have to take a look and see if you are actually an employee or not. If you're not prepared to go through all the extra filings and deductions, then you might be better off just taking the employee route if they are indeed that, because you have to realize that without self-employment tax that you pay on that 1099 income, you're paying your share of the payroll taxes and you're paying the employer's share of the payroll taxes that would have been paid by them had you been classified as an employee. But when you're self-employed, you're stuck with both parts. So while it might seem good to you that no taxes are being withheld in your approach with that, you also could be putting yourself in a situation where you wind up paying taxes. You wind up paying a portion of the taxes that is normally required by an employer that's paying out the W-2. Just a word of caution here when someone offers to pay you as a contractor, make sure you're prepared for all the consequences that may come with it so that it doesn't wind up being a worse deal than what you may think it might be. All right. So that's all for now. I hope this helped. If you have any more questions about this topic or any other tax related questions, feel free to reach out. I'm happy to help. I'll talk to you in the next one.